This is our Forex blog for February 18th, 2014. These are our currency indexes, which let you see visually at a glance what each currency is doing. Here's the dollar. You can see it went from below to above the previous day's high, which is a very bullish thing to do. You have a nice little head and shoulders pattern right here. When it broke that trend line, is very likely to fall for a couple hours, which it did. Found support at the previous day's most actively traded price in the dollar. Which is oftentimes the support area, and when it is in the support area, it tends to become an area that causes big moves the other direction. And basically, in a nutshell, you just want to buy the strong currencies versus the weak and sell the weak versus the strong. And for those of you who don't want to have to learn how to trade, you can just take our Forex signals. You can see today the euro dollar, we did quite well, had a win here, small win, huge win. Nice short here and pretty much a break even. In the pound, we also had a pretty good day. Win last night, win, loss, huge win, win, win. Bought the low right here, rode it up for about 20, 25 pips. Shorted, lost 8 pips, shorted here, made money, made money, made money, loss, win. Pretty much 3 pip loss, break even, 15, 20 pip win, and we're still short. So it did pretty good. If you don't want to take our trade signals, you can just focus on the strongest currencies. So the daily and weekly trend of the euro is up. Broke last night from below to above its hourly moving average and pretty much trended up all day. You want to trade that against a currency that's weak, such as the pound. At 3 o'clock broke underneath its hourly and it's been trending down all day. The euro pound is one that you're very likely to be looking to buy pullbacks and little sideways rectangle breakouts. So you buy, you made money, buy the pullback, you made money, buy the pullback, buy the pullback, buy the pullback. Nice little rectangle pattern. 2.5 hours sideways, little narrow rectangle breakout. It went up again. This is kind of the dead time of the day, so you might not take the trade, but that illustrates the type of pattern that you would take. Nice little sideways, low volatility rectangle patterns. They're a little bit longer width-wise than a normal flag pattern, but these are very high probability. And that's all you do is you look for a strong currency and you trade it versus a weak. You can see the New Zealand extremely weak today. It just gave a buy signal in the euro dollar here. It shows up, you can hear the audio alerts. And you just use a trailing stop to get out. But again, getting back to this, you can see the New Zealand broke below the previous day's low, and then on the way back up, it acts as resistance. Last week's most actively traded price and all the New Zealand pairs, very major resistance area. The daily and weekly trends extremely down. The perfect oscillator, anytime it hits the plus 80 level, very likely to be a place it's going to reverse. You can see this one here, reverse at that time. Most of the time when these hit the plus 80 levels, you're going to have at least a sideways motion for half an hour or a reversal. If you don't get a reversal, it's a huge sign of strength because statistically these are extreme areas. So this is ideal place to sell. We saw the euro was strong today. The euro New Zealand is going to trend very well because you're in fact so well that there's not much in terms of reversals. You got this nice little move up, you got a nice little rectangle pattern like I said before. You have another rectangle pattern, which, a lot of times these happen, and you can, once they form for about an hour and a half to 2 hours, you can kind of, buy the little pullbacks and get in a little bit early before it breaks out. If you are in one currency that's super strong and another one that's super weak, you don't need to wait for it to break out over its high right here. You can get into the trade right here with a much tighter stop. And that's the key to trading. Small loss, big win. You can see it went up considerably more than what your risk is. If you, bought this trade right here, this is your risk. You put your stop right underneath the little sideways low, and even if you got out in this little area right here, you can see it went 3 to 4 times more up than what your risk is. And that's the key to trading. Now, obviously, the earlier you get into the trade, the better. You can, if you have a bigger account, you can scale out of trades. Buy 2 lots and scale out of one once it goes 15 to 25 pips, and then if you're in a trade, you could, every time it makes a higher high and has a little pullback, move your stop up a little bit. Higher high pullback, higher high pullback, you know, a slightly higher high pullback, and then you get stopped out right here. There are a lot of ways to trade using our software.